I guess, is there anything big in regards to, we talked Treasury codes, like how strategy is playing in, and mentioned that the ETFs are holding like, I mean, they're holding a few percent now of supply in total amount of Bitcoin. And I know Saylor and Strategy are also a very large contributor. And he's still putting in pretty massive buys.
Yeah, Strategy has 600,000 Bitcoin on their balance sheet. Um, it's an actually crazy amount. I think that's like nearly 3% of all the Bitcoin. If I say 21 million, but in reality, it's hard to say for sure. But based on how long Bitcoin's been around and how many wallets have probably been lost and how many haven't been moved, it's there probably is around 16 million in total. So like 5 million Bitcoin probably lost over the years, over the past, I don't know, what has it been, 17 years? That's crazy. I feel old. Um, so I mean, if I look at it like that, strategy has probably close to 5% of all, like, let's quote unquote available BTC. And I I recently did a report that just dropped today on different ways to get exposures to Bitcoin, not just directly holding it or through synthetics like perps or whatever, more like treasury codes, ETFs, the miners, even like preferred stocks, convertible bonds, just like a few different ways. But what was interesting to me was like, double clicking on the treasury codes. Let's look at MicroStrategy. Like people, we even on this pod we've talked about how much leverage is coming in because of these treasury codes, and when is the ball going to drop? And then I look at the number one, strategy. I look at the number one, the person who started it all, Michael Saylor, and based on their enterprise value, which is just market cap plus debt. And if you look at how much debt that they've issued to purchase these Bitcoin and even include their preferred shares, I know a lot of analysts don't like to include preferred shares in their debt, but at the end of the day, preferred shares, most of them at least, are obligations to shareholders. They're like a higher tier, so it does come, like, if it's an obligation, it is debt, and I do treat it as such. And even with the preferred shares and the amount of debt that they've raised and purchased BTC, that's about 11 billion. And we're looking at strategies $125 billion market cap, 120 or thereabouts. So we're looking at a debt to enterprise value of 10% or less, which really isn't that levered. Like, if I did the analogy of a homeowner, um, if the homeowner had paid off this much debt, they would be in year 27 of their 30-year mortgage, right? So, and that doesn't seem very risky. They have 3 years left to pay it off. Like, I don't think, well, only talking about MicroStrategy or strategy, I don't think it's as risky as many people have made it out to be in the past. So, and once it continues to trade above NAV, I think it's about 1.8 right now. I think once it continues to trade above NAV and they continue with these preferred shared offerings, the different tiers, they continue with their at-the-money market offerings, I think, it seems relatively sustainable at these levels.